The crypto top is in, Bitcoin hit its all-time high, and that's it. Sell everything in your crypto portfolio. That's the question in every investor and trader's heart right now when they're thinking about what to do in this market. But I'm going to show you some key critical data I don't think people are paying attention to that exemplifies that while I am overwhelmingly bullish about where this market is still yet to go, I think we do have some downside price action, or at least some chop to flush out some critical things I'm going to highlight right here before we see that move higher so we can stay on the right side of the trend. First up is the price action itself. Yes, we had this high here at about 123, and then we pushed higher 124. And in the data that I've showed here on Discover Crypto, we had bearish divergence coming into this, so we could have expected just from that signal on both the RSI and the money flow that we would see a correction. Now, on the bounce here, that was going to give us that next data point. And what we see in that bounce, if we draw a fib from that high to the low, the price action bounce only made it up to the golden pocket, which I highlighted on the Discover Crypto 4 p.m. live streams earlier this week. Watch out for a reversal. That will give us signal. In this case, we got the reversal, boom, and now we formed a bullish flag, or basically a falling wedge here. And on these falling wedges, yes, they do tend to break bullish. However, there are some signals that there's some weakness in the market that we need to pay attention to. That doesn't mean the crypto bull market cycle's over. I think they're trying to shake out as many tourists as possible. So the question that you have to ask yourself is, are you a tourist in this market, or are you here to make money in this market? Because there are critical signals that are going to exemplify when that great buy opportunity is going to present. So when we look at this, and yes, we've got the signals, we have this level. Are there levels below this we need to watch as well? And I think there are. One of those things that we have to pay attention to is the dollar index, because while this did break down here and we saw that massive move up, and this is early April, at the end of that tariff sort of downtrend in stock market and crypto, everything was crashing. But on the break of this is when we saw that rebound. And yet we've had this sideways chop in the dollar, the DXY. If you pull this up on the chart, you know when this is dropping, that tends to be when Bitcoin is flying. When this is pushing up, this tends to be very depressive in risk assets, meaning the price action isn't very bullish. In fact, it tends to be quite bearish. There's an inverse correlation. And on the very near term, when we look, for instance, on the 4 hour, the dollar has been pushing up. And what have we seen in the recent days? We've seen drops in the price action on Bitcoin. So we're going to keep an eye on this, because this is going to give us one of those leading signals or in tandem signals of where that risk narrative is. Because one of the things we're seeing in the stock market is, as this is pushing higher, there's also some bearishness in the strength of the risk in the market. We're seeing bearish divergence over, all the way since February of last year on the money flow, but more recently from middle of July to where we're at now, we're seeing bearish divergence on the RSI. So does this mean the entire bull market's canceled? No, sometimes there's periods of patience. Sometimes there's shakeout sideways. Sometimes there's breakdowns in price action until it resolves back to the upside. And in crypto's case, we're seeing some major signs that people are getting too frothy. This is a cycle of broken expectations. Everybody keeps expecting it to push higher, and you can see it in the open interest. The open interest is staying high. And in fact, not only is it staying high, we saw a major flush out, and we still are seeing the open interest remaining elevated. And this is very important because this indicates that investors are still relying on leverage. We want to have more spot price action, a more balanced approach, so things aren't so exponential on moves with liquidations to both directions. This is one of the reasons why we're watching the liquidation heat map. And in this case, on the 3-day, we see most of the liquidity is above us, meaning these people are shorting and adding to shorts on the way down. So we have the liquidity above us. Now, we have seen in recent days that the price action has been going down and scooping up the liquidity that was below us. And now we kind of flushed out the majority of longs. However, we're getting a little bit more right here at 110,000. And I do think we still have that opportunity to move lower. Even if we bounce here, I'm watching for another flush down into this region, 108, 107, potentially even below. And I'm going to show you why here in just a moment. And one of the reasons we need to pay attention to this is borrowed money. So this puts pressure in the market. It narrows the amount of price action can move before people have to. They're forced to close their position. If somebody's long, they have to close that position by being forced to sell. If somebody's short, they have to close that position by forcing a long in the market. So when you have all those longs that were stacked up below us and getting liquidated, you see those fast moves to the downside. However, we're also seeing the quandary about the Fed. We just got the rate cuts. Why isn't the price moving up? Well, we saw this last time we got rate cuts. We had a 12% dump before we had a 58% rally. We're kind of in the middle of the same thing right now. Nothing is out of ordinary in context of how we have seen things play out before. Yet people say, but the landscape is so bullish. I even say this. The landscape is bullish, but it doesn't need to move up right now because the fundamentals lead what's going to happen in price action. And when they are overwhelmingly bullish, price action and very regularly on any asset will move in the opposite direction to trap people and then resolve back in the direction of the fundamental pressure that can buoy it back to the upside. Now, where are we at in this cycle? Just highlighting a couple key points. We had the bear market breakdown, great. And then we had the finalization of that on the FTX collapse. We had the regularly scheduled bull run. We had the start of Bitcoin financialization. This is when the ETFs got approved right here. And what did I just say? Incredibly bullish news. ETFs approved. We sold off. And then we ultimately rallied from 38,000 up to where we're at, most recent high, over $124,000. We need to stop being so fearful. In fact, we need to utilize the fear as a signal in the bull trend for where great opportunities are. And I'm going to show you that here in just a moment as well. Now, where we're at today is above this key trend line, massive trend line that's projected all the way through and fighting through this. It makes sense with such a multi-year resistance level that we have interacted with resistance predominantly so far. Yes, we have broken through that. And I want to highlight something here. Yes, we have broken through this line. We have tested back below it. We're chopping around a multi-year, overwhelmingly important trend line here. So it's not out of context that we're having a bit of a sell-off. I've had this on this chart on my page as well, which you can find right here. Make sure you're giving me a follow. It's my pinned post here, highlighting the fact that this level that we're watching, we do have this level down here. I call it the gift from God buy zone. Why? Because everybody keeps expecting this to melt to the upside because everything is so hyper bullish on the context of this market. Yet people keep getting chopped out. So I'm watching this zone and I'm going to show you another level within the zone that substantiate this. This isn't just an area on the chart. So we're watching what's going on here because we still have quite a bit going on, because it's not just that that's, a level. We're in this stage right now where corporations, institutions, and world governments are stacking. They're competing to figure out what their program, what their process, what their goals are going to be to get as much Bitcoin as possible. And yet people are worried at this level. The expectation is making these open interest levels continue to stay high. And so people keep getting chopped out because of that. So let's be mindful of that, because when you look at the futures, CME futures, we pushed up into this massive gap we had, filled it, came back down, rejected. We have a trend line directly below us that's in line with the spot market exchange pricing, which is in that 108 to 107 level. Beyond that, we still have a gap below us down here at $91,800, $92,000. And where is that in that gift from God buy zone? Right in this zone. So it wouldn't be out of context for this to flush down, convince people 4-year cycle, market's over, and then ultimately rebound. Now, looking at where we're at in the cycle, where are we really? The last 2 cycles, this is the current cycle right here. Even on the exact 4-year cycle time frame, measured from the cycle bottom, we still have upside price action to go. September was expected to be a bearish month. And then what happened? We saw a little bit of upside price action. Everybody forgot that it was supposed to be a bearish month. Now that it's choppy, it's frustrating, people are thinking that the cycle's over. Let's look at the data. Let's not be so sequestered by the emotions of the moment, because the signals are screaming higher. Gold is just absolutely going parabolic to the upside. Bitcoin is not yet moving. this is one of the leading signals before the major moves in Bitcoin. And Max Kaiser, legendary Bitcoin advocate and maximalist, says Bitcoin's fair market price is $250,000. But somehow, Bitcoin's failing to follow gold so far. Well, Bitcoin and altcoins failed to follow gold and stocks to all-time highs this month, partly because a lack of stablecoin liquidity on crypto exchanges. Okay, but what else is here? History shows that traditional risk assets need to cool before crypto surges. So while Bitcoin is sitting still, gold is mooning, stocks have been hitting new all-time highs, and yet what we're seeing here is the liquidity games keep bulls away from challenging all-time highs. If they're making money going parabolic in gold and the stock market's doing well, we're not seeing that rotation yet into the Bitcoin and crypto ecosystem. So at the same time, gold and US stock markets continue to post repeated all-time highs. We want to see some of that momentum cool a little bit, and then we will likely see a rotation there into Bitcoin, because remember that $250,000 target that the fair value Max Kaiser called? Well, we can also see Bitcoin catching up to M2 would be Bitcoin priced at $250,000. But wait, there's more. We see that the red line and purple line, these are the terminal price and delta top, also are at that $250,000 level. So not only the correlation with M2, but also the fact that the market is not only heating up, it's breaking people's expectations because there's supposed to be a recession. And yet what we're seeing is people waking up to overwhelming money printing and the strength of the labor force, the strength of the stock market, the strength of what we're seeing in the economy, even with the GDP numbers that were just revised up. And yet right now people are bored, and you can see it in the data. The Bollinger Bands are at the tightest level they have ever been on the monthly chart. The tightening of the Bollinger Bands means constricted volatility, right? There's not been much volatility. This signals that a big move is coming in the near future. And we can see this, the Bollinger Band's tighter as ever as traders eye $107,000. But Kelly, I thought you said you're bullish. I am, but there's so much open interest in the market and expectation, it wouldn't confound me. It makes sense to have a bit of a flush to shake out the weak hands. So Bitcoin traders' supply Bitcoin levels cause max pain around a giant 17.5 billion options expiry, while Bollinger Bands are setting new records. So we're seeing a number of different things line up here in favor of seeing this price action move down, which will ultimately end up in a macro bullish boom. Why? Because we have not gotten to the level of fear yet that we have typically seen before the massive moves to the upside. I mean, look at this, 22. I'm looking right there in that orange box, 22. Here, 26. Here, 29. Down here, what is this? 29, 21. Even here was 40, but this was a little bit different circumstance, 34. Where are we at right now? 44, very neutral in my opinion. So I do think the market is getting positioned to set up the most bullish run of this cycle, and yet it's at the most frustrating time, and that's how markets work. And as I just mentioned, the GDP above expectations, the growth is above what people are expecting. We're also seeing right here, we're seeing all of this liquidity above us on Ethereum, just taking out the longs, taking out the longs, taking out the longs, taking out the longs. So we have to be a little bit cautious here because there's so many people out there that are dooming the market because there's normal, healthy price action. We are up 80% over the last 12 months on Bitcoin. Stablecoins are about to ramp all the integrations and deploying of major institutions integrating with stablecoins. Even Swift made an announcement today or yesterday about major developments that they're doing for instant finality and cross-border payments and all this, basically integrating crypto. And advisors are now starting to allocate, registered investment advisors. Wirehouses will open up Q4. You know the drill. Bitcoin does nothing and then it explodes. Your job is to sit tight. The market has so much room to go to the upside. And in order to do that in a healthy manner, it may need to shake out a few more tourists. So my question to you is, are you a tourist or will you be here for the legendary run that's on the horizon? I'm looking for some downside price action as a springboard for higher, higher, and higher. So I'm looking for the downside price action for much, higher prices coming in the near future. Let the market flush some of this open interest. Let some of the gold and stock market narratives cool off. And I do think we're about to see that absolute boom season. We just need to get through this final flush. Make sure you're following me here at Kelly Kellum. And of course, make sure you're following Discover Crypto. And the link to join us in our Discord is right here. Get in there. We're keeping you on the right side of the trend. And with that, I'll see you in the next one.